Welcome to Taking Stock. I'm Amanda Laing. Coming up on the show, bracing for trouble, how business is coping in a stop-and-start trade war. And the biggest economy in the country also has the most to lose. We're talking to the finance minister. Plus, is building cars in Canada really a sure thing? That's all ahead. First, for the week that was in business, it's time for the briefs. Even as the federal government unveiled new measures aimed at keeping auto production in Canada amid a trade war, reports from Japan suggested that Honda was considering switching its production from Canada and Mexico to the United States. Honda's Alliston, Ontario site employs more than 4,200 people. The province and feds have promised billions to Honda to encourage it to build electric vehicles here. Honda denied the reports, but did say it constantly studies options for the future. Meanwhile, Donald Trump suggested that workarounds, don't call them exceptions, might be coming for the auto sector and specifically for auto parts. Canada and the U.S. currently have tariffs levied on each other in the components of autos that are deemed non-compliant with our free trade agreement. Trump's comments suggested he wants to give the automakers time to relocate their production. Canada's inflation rate cooled in March as prices for gasoline and travel fell, both tied to the turmoil caused by the U.S. tariffs. The Consumer Price Index rose 2.3%, compared with a 2.6% increase in February. The data for March is before any direct tariff impact that might send some prices higher. The Bank of Canada held rates steady this week as it waits for the shoe to drop on tariff turmoil. Rates will stay at 2.75%. The bank said the trade situation continues to be a major source of uncertainty. It lowered its growth projections for the country too, now seen between 0.8% and 1.6%.
Tariffs have been announced, they've been imposed, they've been retracted, they've been threatened again. The message is we're navigating carefully. Our goal is to ensure that Canadians stay confident in price stability.
Canadians have taken steps to shore up their finances in the face of economic turmoil and feel better as a result. A survey from MNP showed that 73% of consumers are delaying major purchases. 74% have cut back on spending. They're also less worried about rising interest rates. But despite some improvement, well over half said they are worried about paying off their debt. Wealth continues to concentrate in a few hands in Canada. According to StatsCan, the top 20% of earners' net worth was $3.3 million per household at the end of last year. By contrast, the bottom 40% of earners' average net worth was $84,000 per household. Investment gains only widened the difference. And those are your business briefs. Uncertainty is the worst thing a business can face, and it definitely seems to be the only sure thing these days. Candace Laing is President and CEO of the Canadian Chamber of Commerce. Candace, thanks for being with us.
Thanks for having me. And
I know you've been down in D.C. What are you hearing from your U.S. counterparts about optimism that we can come to a resolution on the trade war?
Well, I was in D.C. last week, and from both business and political leaders, was actually really pleased to hear a strong message just of Canada is a valued partner. I would say, Amanda, there's a bit of a difference maybe in leanings, and sometimes that message comes with you are an absolutely valued partner, and we don't agree with these tariffs. Or it might be you are a valued partner. We understand the importance of our relationship, and let's see where this goes. And I would say my sense of that is because what's important for a lot of those leaders that say the latter is they're seeing that with the foundational perspective of it's really important for America to get their house in order and to really address the federal deficit, which they believe is not sustainable. So valuing the relationship, but wanting to see where this goes because they're holding on to that aim.
Of course, seeing where it goes is the preoccupation for Canadian business, too. Are businesses starting to adapt? They tend to freeze in uncertainty. Are you starting to get a sense that they might actually make plans even amidst this uncertainty?
Well, as we know and understand, like long-term plans that are based on tariffs are not really effective because that doesn't provide any certainty, even though it's supposed to be, a directional aim of the America First trade policy. But I think we're seeing more exactly how you say, just the freeze, the holding on still as long as possible. Of course, not everybody is able to, but we're still seeing, where I think normally we would see companies taking decisions, trying to hold off those decisions, especially when it comes to workforce and layoffs.
Where are we seeing seeing this in terms of your membership, the businesses in this country? Are there regions where it's particularly showing up for you right now?
Well, with the regional question, that's a great question. We just follow our data from the Business Data Lab, and we know there's areas in the country that are much harder hit, St. John, New Brunswick, and of course, communities in southwestern Ontario, which are more heavily impacted by the sectoral tariffs. So with that, I think of, the auto sector and steel and aluminum. But I think in terms of who's also hardest hit, we can't forget about two other things, if I may. One is agriculture, and that's from what I call the boomerang or retaliatory tariffs that are coming through from China, of course. But then, Amanda, when we go back to the fentanyl and border tariffs, that's a really important area for us to be paying attention to right now, because while we have the reprieve with anything that is CUSMA compliant. I heard this in DC last week as well. We're actually discovering a new gap in our understanding and data about how much of our trade, and this is a very important distinction, is CUSMA eligible versus actually having that trade and those goods registered under CUSMA. And that's a very, I think, as we're learning, big difference. Really interesting, and one we'll keep tracking. Candace, got to leave it there, but so good to have you with us. Appreciate it. Thanks for having me. Candace Laing, President and CEO of the Canadian Chamber of Commerce. Still ahead, fighting a tariff war from the front lines of Canada's economy. Ontario's finance minister is next. Canada's largest province has been leading the way on the tariff fight, and of course that makes sense since it also has the most to lose, starting with the auto sector. Peter Bethlenfalvy is Ontario's Minister of Finance. Thank you for being here. Pleasure. And of course, the speech from the throne this week, very focused on industrial capacity, on shoring up the defenses, protect Ontario. In fact, the headline on that speech. What's the feeling about what needs to happen here? Because we are under attack. What's the message you want to give on that front? Well, we're going to do what it takes to protect Ontario and the economy, but also grow the economy. We've got a big economic growth agenda focused on critical minerals, energy, and infrastructure, and supporting the workers as we really boost our productivity and our economic potential and increase wages for workers. And of course, there's a lot to dig into there in terms of the opportunity, but I want to start with the threats. And the immediate threat, of course, is we do have auto tariffs underway, although that could change at any time. We had this rumor that Honda was pulling out. The big concern, of course, is that production will leave. Future production that isn't yet planned will not come here because of the uncertainty here. How do you persuade Honda and GM and Ford and Stellantis to stay here? Well, we've got incredible value proposition here in Ontario. So Honda's committed, told us they're committed to Ontario, they're committed to Canada. We've got a great workforce, we've got great natural resources, we've got the critical minerals that go into the electric vehicle production, we've got energy, infrastructure, clean energy. So we've got a lot of things that really make Ontario a great place to invest capital. Honda has reaffirmed its commitment to Ontario. The provincial and federal government have put billions on the line, not just for the 4,200 workers in Alliston, but for electric vehicles, for a whole future. And with other car makers, do you feel as though that's all safe money, safe investments? They've told us they're committed to Ontario, and we're committed to them. We're committed to all the electric vehicle investments that we're making, because that's the wave of the future. And it's not just supporting the manufacture of electric vehicles, it's the battery manufacturing, it's the critical minerals that go into that, it's the clean energy, nuclear that goes into powering the electric vehicles. So we've got a great footprint here in Ontario and great workforce. You've also, your government have promised $11 billion to help businesses that are dealing with this attack. Hopefully, some of it won't be needed. Hopefully, the trade war dissipates. But from a fiscal point of view, you're the guy that has to make all of this work. How do you feel about the spending that has to happen that doesn't actually go to building capacity and building the economy? It's just to help people stay where they are. Well, our first priority is to keep people employed and keep them in their jobs. But we're going to help them if we have to deal with the uncertainty. We're there to provide some certainty, hence the $11 billion of supports. It's hence why we've directed Ontario companies to buy Ontario, Ontario-made. It's why we're leading the way on eliminating trade barriers between provinces. We're going to lead the Canadian free trade. Ontario is going to take a lead and just get rid of all the exemptions and make sure we send a message to all of Canada
boost our GDP right here in Canada by maybe a couple $100 billion.
The numbers that people kick around, if we can get that down, are big, but the frictions are real, and they involve things like accreditation for employment. We protect jobs in our provinces, one to the other. Do you feel as though the other provinces are all on the same page, that this is actually going to survive this period of intense, this intense reaction we're all having? I
think there's tremendous public support for taking the necessary steps to encourage labor mobility in this country, to have free trade in this country. It's a great way to boost GDP. It's a great way to create really good paying jobs right under our noses. And this is the time we've got to be bold. And Ontario is going to lead the charge. The Premier and Tim Houston, the Premier of Nova Scotia, are going to be together and we'll announce the biggest movement in free trade in Canada in a long time.
And then, of course, we've talked a lot about critical minerals, the Ring of Fire. We've been talking about it for a long time. Are you confident that we can actually push through some of the very real, well-intentioned barriers that exist to getting project done faster?
I'm very confident, and I'll tell you why. We're going to lead the charge in reducing the regulations that slow down getting anything built. We got to build more, faster. We're going to lead the way on permitting to make sure that it doesn't take 15 years to start the process to build a mine, get a shovel in the ground for those critical minerals. But we can't do it alone as well. So I've called on the federal government to, for example, kill Bill C-69, because nothing says don't build in Canada to the world like a bill that stops us from getting shovels in the ground. And we're going to do it on a consensus basis with First Nations, with the federal government, with municipalities. And we have a consensus, I think, that's really building to do that.
There's a reality, we don't quite know how this plays out, but there is a potential reality of just a higher barrier to doing business with the U.S. in our future, whether that's a renegotiated CUSMA or just tariffs that are laid on. Are we prepared as a province to keep the businesses here if we face, say, a 10% across-the-board tariff just to access that market?
Absolutely. If you look at our strength in manufacturing, these are high-skilled workers that we have, talented people. We have a pipeline of, through colleges, universities, skilled trades, working with labor unions. Business around the world say that's an oasis of comparative advantage in a politically environment in Canada, very stable. I think that this is really our decade right in front of us. I think we have the public support to do that. And I think we have a real need, and people want us to boost wealth in this country. Mm-hmm. Healthcare and education, all that, without a strong economy is a lot more challenging. So I think we've got a lot of support to do this.
And it's not just provincial governments, but the federal government as well that is spending a lot, or promising spending in the case of the federal government. Do you worry about the fiscal prudence in Ontario, but federally as well? It's all the same taxpayer.
Well, I am the finance minister, so that is something I always look at. Yeah, you better be. Look, we've been able to reverse the fiscal deterioration in Ontario, which was going on for decades before we got into power. We've been able to get the best fiscal metrics in over a decade, whether it's the measure like debt to GDP and those sort of metrics. But don't listen to me. Listen to the credit rating agencies like S&P and DBRS who have upgraded the credit rating. Our borrowing costs have gone down. We're in the best fiscal shape we've been in over a decade because that gives certainty to markets. It gives us ability to reduce taxes and fees, which we've been doing. It gives us an ability to actually deal with situations like this. So we have more fiscal firepower than we haven't had in decades. The federal government has obviously a big role to play. They have a central bank. They have a lot of institutions. They have taxing authority right across the country to have the revenues to support the tariff, the retaliatory tariff revenue. That goes to the federal government. That's got to go to affected workers and industry. But I know that working together, we will be able to make this country a greater economic powerhouse.
We got to leave it there, Minister. It's great to have you.
Always a pleasure.
Peter Bethlenfalvy is Ontario's Minister of Finance. Coming up, the auto industry is certainly under attack, so what might a future-proof sector look like? That's still ahead. But first, Meta was in court this week facing down charges that it spent billions of dollars buying Instagram and WhatsApp with an aim at cornering the market. The challenge for U.S. regulators will be proving which market Meta is competing in. The FTC makes a distinction between friends and family channels like Facebook and Instagram versus public sharing sites like X. We're back after this. Welcome back. Canada's auto sector is still under tariff pressure. So what does the future hold? Well, here's a look at cars in Canada by the numbers. Canadians bought 1.8 million cars in Canada last year, an increase of 8.2% from 2023. Compact SUVs led the way with 560,000 units sold. GM was the market share leader, selling 294,000 vehicles in 2024, but Volkswagen saw a sales jump of 28.2%. Subaru's sales were up 23.8%, and Mazda's were up 23.2%. Canada produces about 1.5 million vehicles a year. Cars assembled here include Ford, GM, Stellantis, Honda, and Toyota, but only 7% of the cars bought by Canadians were made in Canada. More than 90% of the vehicles made in Canada are shipped to the United States. Vehicle exports are a huge chunk of Canada's export total, valued at $51 billion in 2023, and vehicle manufacturing contributed $18 billion to Canada's GDP that year. Meanwhile, while the industry supported 125,000 direct jobs in 2023, the majority of those in auto parts at 71,000, 54,000 in assembly and truck and trailer production, that is well below the peak. In the late 1990s, 175,000 people were directly employed in the auto industry. Musing from Honda about relocating isn't surprising given the reality of tariffs, but where does it leave Canada and the future of the auto sector here? Brian Kingston is president and CEO of the Canadian Vehicle Manufacturers Association. Brian, thanks for being with us.
Thanks for having me on.
This, although Honda denies it, and we have, the government here saying that companies are committed, it's the kind of thing that must send a bit of a nervous rattle through the whole sector. What do you make of the prospect of some of the biggest manufacturers thinking about their future and where they need to be?
Well, look, it's a very uncertain time for the industry right now, and these U.S. tariffs are putting costs on manufacturers throughout the North American supply chain. We're now estimating that the cost of tariffs on U.S. manufacturers could exceed $108 billion U.S. dollars. That's the cost of importing vehicles from abroad as well as parts. And so you can imagine the impact that has on an industry that has been founded on integration. So it's a very uncertain time, and it's concerning for Canada given how important this sector is to our economy.
So it's interesting, we just laid out the numbers here. Canadians buy a lot of cars. If we bought every car we made, we actually could produce for a domestic market. I know the market's not set up that way, and of course Canadians want to buy some other cars as well. But is there a future where we actually shrink our manufacturing back to what it was pre-Auto Pact, where we actually create, the cars that people want here?
It's not an ideal outcome. The industry has been founded on free trade across North America and integration with the U.S. And the reason for that is it allows for economies of scale. Auto manufacturers that build in Canada, about 90% of what they produce goes to the United States, and that gives them access to a much larger market, and therefore you reach economies of scale and you can be competitive globally. Mm-hmm. Now, in an environment where the North American market is completely divided up into smaller markets, could you create a more Canada-focused supply chain? It is possible. It is not ideal given the way this industry has been founded.
Let me ask you then what I asked the finance minister, which is if we live in a world some years from now or months from now where there's a 10% tariff to access the U.S. market, can Canada still be an attractive place for companies to manufacture and ship into that market?
Could be. It will depend on Canada's currency level. It also depends on how the U.S. structures its tariff on auto. With the 25% tariff that they've put in place, they have indicated that you're able to back out all U.S. parts and components that are in that Canadian-produced vehicle. We're still waiting on the details, but that would ultimately mean a lower tariff rate. So if the Americans go forward with across-the-board tariffs, but they do build in allowances for these parts and components, I think there's a way forward. Again, it is not ideal. Tariffs are taxes that this is going to put costs on manufacturers and ultimately on consumers. But I do think there is a path forward here with the Americans once we get through the election and get back to the negotiating table on our North American trade deal.
How are the manufacturers coping right now, Brian, with this degree of uncertainty, even on figuring out what is and isn't victim to a tariff right now?
Well, this is the biggest challenge that we're dealing with. You know, business needs certainty to move forward with investments. And when you look at the automotive sector, this is a capital-intensive industry with relatively low profit margins and very long time horizons. When a company makes an investment in a market, will be there for decades, if not longer. I mean, manufacturers have been building in Canada for the better part of 120 years. So the uncertainty that is being created by the U.S. administration is hugely problematic. Announcements are made on an almost daily basis, and details are lacking across the board. So that makes it very challenging right now. And, you know, if you think back to when the USMCA, our North American Trade Agreement, was implemented in 2020, there was about $288 billion in automotive investment unleashed across North America because companies knew the rules of the game. Those rules are changing constantly at the moment, which makes it extremely challenging to plan.
Thanks for being with us, Brian.
Thank you.
Brian Kingston, President and CEO of the Canadian Vehicle Manufacturers Association. Time for the takeaway and living in a post-truth world. More and more of us consume our news and information online. More than 40% of Canadians now use social media as a primary source, despite the fact that most of us also distrust what we see. A growing number of consumers say it's harder to tell the difference between what is true and what is not when it comes to information we consume. And the fact is that there are a number of actors in the world who are engaged in manipulating us via online information. Interference in elections is just one sliver of that activity, though arguably it's the most harmful in that it undermines democracy. But misinformation about people and businesses is also a growing category, as tech-savvy bad elements employ new tools like artificial intelligence and social media algorithms to make the fakes look real and to persuade their audience. Caught up, as many are, in our own echo chambers of comfortable online voices, it's easier than ever to see facts that we begin to believe and that we stop cross-referencing or even questioning. But beyond the more subtle manipulations we may be subjected to, there's an even more alarming and visible trend to which we can fall prey, and that is the outright denial of a fact, despite the weight of evidence to the contrary. The trade war has been highly illustrative of how this tactic works. That tariffs raise money instead of costing taxpayers is one such falsehood. That trade deficits are somehow inherently unfair is another. That the U.S. has been treated poorly by the rest of the world is perhaps the biggest. And yet, repeated often enough, these outright falsities become accepted baselines by many. Turn on American television, and you'll hear journalists and even economists basing their assumptions on some of these so-called truths. There are examples of this kind of behavior closer to home, and likely more to come as a winning strategy is repeated. The real danger in this post-truth world lies within. We are vulnerable to falling into line. Something repeated often enough doesn't become more true, but human nature and fragile neurology may make it seem so. Fortunately, the solution lies in the same place, within. We can stay alert and aware. Cross-reference facts, look for credible sources, consume information from a variety of viewpoints. My takeaway? Skepticism isn't argumentative or pig-headed. It's a fundamental requirement for a healthy and lasting democracy. That's Taking Stock for this week. I'm Amanda Laing. Thanks for being with us.